We're going to have a look now at another question 1 adjustment, this time the bank account, and I'm taking a fairly old exam question back 2002 because it has 4 items to offer us. The later questions only have 3. So we look at our trial balance and we find that according to it the overdraft is 7,400. So I would be putting that in as a minus 7,400 figure in my adjustments. And then if I spend any money, it's another minus, and if there's money going into the bank, I use a plus. So that if we end up with a plus at the end, it's money in the bank, a current asset, and if we end up with the minus, it's continuous as a bank overdraft. Now, the first adjustment they talk about is how investment income of 4,000 was paid direct into the firm's bank account. Now, if we look at our investments here, we'll see they're 8% investments, 150,000, and that should yield 8% of 150,000, or 12,000. That's 1,000 a month. You'll notice the investments were made on the 1st of the 5th, so that we have the investments for 8 months. So, applying the accruals concept, we will put 8,000 into our P&L account as income this year, whether received or not. And the amount owed to us will turn up in the balance sheet as a current asset. Now, we'll notice here in the patents that it says the patents of 67,000 incorporates 3 months investment income received. So there's actually 3,000 worth of investment income inside in that 67. Now, you might remember that investment income being income should be a credit entry. So what it means is that we received 3,000 euro in investment income. We debited our bank, and instead of crediting our investment income account, we credited the patents. So I've got a 3,000 credit entry inside in patents, which I must get rid of by debiting it. So I must actually add 3,000 to the patents there, bringing it up to 70,000, and it's then that 70,000 that will be depreciated over whatever number of years it's to be written off over, but that's not our concern at the moment. Instead, no, I must put that 3,000 into the investment income, which I have already. 0 refers to the figure in the trial balance already. The 3,000 refers to the correction of the earlier error. And no, to get to the point, there is 4,000 euro, 4 months investment income, gone into our bank account that we only realised when we received our bank statement. So I'm adding the 4,000 into our bank account, and I'm adding the 4,000 to our investment income account. And I might as well finish that investment income off there now. We know that we're owed another 1,000 because we know that we should be getting 8,000 in a full year. That 1,000 that we haven't received yet will go into our balance sheet as a current asset, but the full 8,000 will go into our P&L account as income. And we've added 4,000 to our bank account there to take into account this 4,000 that we received towards the end of the year. The second adjustment then affecting bank is a cheque of 960 issued to a supplier there, or creditors, entered in our books as 690. Now that means that we have actually paid 960, but we've understated in our accounts by 270 the amount we've paid. We've actually paid 270 euro more to our creditors than we've accounted for. So I must correct for that now by taking that 270 euro out of our bank account. Yes, we have paid it already, but the point is that it hasn't been fully recorded in our bank account, and we owe our suppliers 270 euro less than our trial balance is telling us. Moving on to the next adjustment, we've received 600 euro by credit transfer paid direct into the bank account one of our debtors has gone bankrupt and they've paid us 20 cents in the euro, or 20% of what they owe us. So 600 is 20%, or 1/5 of the debt. So the debt is €3,000. So what we're actually doing here is we're writing off 2,004. Well, let's record first receiving the €600. €600 going into our bank plus 600. Let's show the debtors paying us that 600 minus 600. And now write off the remaining 2,400 as a bad debt. And there's our bad debts. No bad debts in the trial balance, and now 2,400 occurring during the year, so that we're going to put that 2,400 into our profit and loss account as an expense. Just to note that there is a reference in the trial balance to provision for bad debts, but that from a final accounts and balance sheet point of view is actually unrelated to the recording of this year's bad debts that we've got to write off the 2,400 there. The final adjustment then in relation to the bank is number 4. A cheque issued for 3,500 to a director hadn't been presented for payment. Now time is going to take care of that. We won't change what we've done. We have credited our bank. We've paid 3,500 out of our bank account for directors' fees, or whatever it's for, directors' salaries. If we check out the trial balance, we can see directors' fees 62,000. That includes the 3,500 that the director hasn't lodged to his or her account yet. So time will take care of it. The person has up to 6 months to present a cheque for payment. So we're not going to undo that. So adjustment 4 there requires us to do nothing. So our correct bank figure for the trial balance will be minus 74 plus 4 minus 270 plus 600, whatever that is, but it will still be a current liability in our balance sheet. We've got to write off the patent 70,000 over a number of years. That's another day's work.